Today we will review your federal and private student loan consolidation options, as well as how to complete these applications online today. Let's talk about why you should be consolidating and what are the benefits. So one bill, one payment, combined billing, simplicity to say the least. Let's talk about who is eligible to consolidate their federal student loans. Students who have graduated, left school, or dropped below half-time status, and are not in default of their student loans. Parents can do this as well, who have one or more Federal Plus loans, no matter what the student's status is in school, as long as they're not in default. Few myths as to what's not required to consolidate federal student loans. Employment. You do not need to be employed. There is no credit check, and there is no fee or prepayment penalty. You do not need a cosigner on federal loans to consolidate them either. What can be consolidated together? A student can consolidate their federal Stafford loans, Perkins loans, Grad Plus loans, and other federal student loans together that they own and have signed for. A parent can consolidate any Federal Plus loan that is in their name. So if mom has Plus loans, all the Plus loans in her name can be consolidated together, but not with dad's. Dad has to consolidate his separately. So let's talk quickly about what cannot be consolidated together. Students cannot combine spousal student loans, federal student loans, into one federal consolidation loan. Parents cannot combine Plus loans together like we spoke about. And students and parents cannot combine their federal Stafford loan for the student and the Parent Plus loan together either. It's not advisable either. Let's talk about when you should be consolidating. It is different for students than it is for parents. Typically for students, it's best to consolidate during or towards the end of your grace period or after your grace period has ended. That could be for the federal Stafford loan, it's 6 months after graduation. For the federal Perkins loan, that is 9 months after graduation. And for some other federal health loans, it could be as much as a 12-month grace period. So if the majority of your student loans have a grace period of 6 months, I would encourage you to do your consolidating during that time. For parents, there's really no best time to consolidate. Let's talk about the pros of federal and private consolidation. So the number one pro for most families is the reduction in the monthly payment. It saves you on cash flow and it makes the payments more manageable. Simplifying, so both in federal and private consolidation loans, it takes all of the loans and brings them into one payment, which is super helpful. And we do know that students who have 5 or more loan payments are generally likely to miss 1 or 2 payments a year. So that does impact your credit score, so this will help simplify and as well protect your credit. There's no fees or prepayment penalties with federal consolidation loans and most private consolidation loans on the marketplace. Flexible repayment options. So for federal loans, depending upon how much you owe, you can extend the term up to 30 years. Remember though, when you extend the term, you'll pay more payments over time, meaning you'll pay more interest. On private consolidation loans, the terms generally are in the 15-year term. There are a few with 20-year and 25-year terms. Retaining forbearance and deferment options. So if you do have them currently on your private student loans, you may not have them on a private consolidation loan. You do want to look into that. With your federal loans, you will retain them when you consolidate, let's say, federal Stafford loans and Perkins loans into one federal consolidation loan. You will retain forbearance and deferment options. Retain in-school deferment options, same thing with the federal consolidation loan. Maybe not so with the private consolidation loan products. Improves credit? Yes, it typically does for both because it's taking 5, 6, 7, as many as 24 lines of credit and streamlining them into one. So it does perk up your credit score typically within 8 months. Tax deductions on the interest, yes, you can take them on both the federal and private consolidation loans as long as you're not in a higher income where you're phased out of that deduction. So let's talk about the cons of consolidation, both federal and private consolidation. So when you stretch out a payment, and we spoke about this before, the longer you pay, you'll pay more interest over time. So give that some consideration. That doesn't mean that you can't eventually learn to pay more in your monthly payment and accelerate the payoff of this loan. However, if you stick to the terms, let's say you go from a 10-year term to a 20-year term, you will certainly pay more interest over time. It will impact your credit score the longer you have the loan, or your debt to income ratio. So you want to give that some consideration as well. And you will lose borrower benefits on old loans. So let's say you have a 0.25% interest rate reduction with auto debit payments. You will lose that benefit once you consolidate. Now, these new consolidation loans might have that same benefit, but if it doesn't, then yes, you are losing out with that opportunity. But the interest rate and payment structure might be much better that you're willing to take that loss. Let's talk about how your federal consolidation loan interest rate will be calculated. The rate is based on a weighted average of all the federal loans that you're combining together, rounded up to the nearest 1/8 of 1%. This means that in this formula, you typically neither get an advantage or a disadvantage. It's just the formula that the Department of Ed uses to calculate your rate. It's estimated when you do your federal consolidation loan online, you will get an estimated interest rate, and then you will get paperwork from Direct Loans telling you exactly what the interest rate will be for the life of that loan later on. For federal consolidation loans, the loan terms are structured by the amount that you're repaying. So if it's less than $7,500, it's a 10-year repayment term, and you can see it goes up as the amount that you have borrowed increases. Until you get to $60,000 or more, then they can stretch it out to 30 years. So once again, when you stretch the term out, you'll pay more interest over time. Keep that in mind. So yes, there are new programs where you can get income-sensitive payments like IBR or income-based repayment or pay-as-you-earn payments. Eligible federal loans are federal Stafford loans, either grad or undergraduate Stafford loans, grad plus loans, or direct consolidation loans that do not include parent plus loans. Also, if the consolidation loan is a student's loan and includes a Perkins loan, that can be eligible for IBR payments or pay-as-you-earn payments. There are some advantages to these programs. So you pay as you earn, therefore your payment is a percentage of what your weekly income is. After 25 years in pay-as-you-earn or income-based repayment, you can cancel any remaining debt. If you are working for a not-for-profit or some type of agency, qualified agency that is supporting a not-for-profit, then you might be able to cancel the debt after 10 years under the Public Service Loan Forgiveness Program. There are many other nuances that come along with this, so you do want to look into it before you decide that this program is for you. During the time of income-based repayment or pay-as-you-earn payments, the advantage can be for you that there's no interest accruing on the subsidized portions of these loans. And that can help you get an advantage when it comes to not repaying so much in interest. So how much will you pay under income-based repayment or the pay-as-you-earn? That depends. It depends on the family members in your household and your annual income for that current tax year. So you can see here, for instance, in a family of one, for a person that's making $35,000 or more, the monthly payment would be $234. If you didn't work the year before and your income is much lower, your payments can be as low as $0 a month. So here are the stages of completing your federal consolidation loan. First, you should get a federal PIN ID and activate this. Then you can do the online application. We'll show you how today. Then you wait for the paperwork from Direct Loans that comes to the house. It'll be a loan summary sheet. And you keep paying on your loans until the consolidation loan is complete. You do not want to get in trouble for non-payment. So first, how do you get a PIN ID or reactivate your PIN ID? You simply go to pin.ed.gov and you can either request a duplicate PIN or apply for a new PIN. It takes 3 days to activate it, and then you can use it to do your federal consolidation loan online. Once your federal PIN ID is active, then you will go to studentloans.gov and you can sign in right here at the green box. Once inside of your studentloans.gov account, you want to scroll all the way down on the left-hand side and select Complete Direct Consolidation Loan. Once you start the application, it will ask you basic information like your address. It might already have it pre-populated because of your prior loans, and it'll ask you for references, things of that nature. So you want to fill that information out, and then it's going to link you to the IRS so you can import your most current taxes. And this will help you qualify for either income-based repayment, pay-as-you-earn, or just the standard repayment. Once you submit your online application, it should take 15 days for your loan summary paperwork to get to your house. The paperwork should come from Direct Loans. If you are making payments, then keep making your payments until you're notified that the consolidation loan is in process. If you don't hear from them in 15 days, it's easiest just to call the toll-free line here, put your social security number in and your date of birth, and they'll give you the status of your federal consolidation loan and where it is in the process. If you've forgotten a loan, you have up to 6 months to add it into your federal consolidation loan. So no fears. You just give them a call, let them know, and they'll send you the documentation to add these new loans that you found. Now, what about your private loans? Can you consolidate them? You have all of these types of questions, I'm sure. So can I consolidate my private student loans? The answer is yes. You will need to be credit worthy or have a credit worthy cosigner, but yes, you can do that. Can I consolidate federal with private student loans? You can do that. There are some products on the marketplace that allow you to do that now. Should I consolidate my federal and private loans together? Well, that's a very individualized question. So you might want to give us a call and we can help you look at the pros and cons when considering doing that. You want to carefully consider these pros and cons because you don't want to lose out on benefits that you would normally have. And what rates can I get? So the rates will depend upon your credit, your work history, and possibly your cosigner's credit. So what do I do if I've decided, yes, I do want to consolidate my private loans, or I want to consolidate my private and federal loans together for one low payment, low interest rate, and simplicity? You want to take a look at, gather all of your private student loan statements, make sure you understand how much you do owe and what the current interest rates and terms are. So many times they can be different, 10 years, 15 years, hardly any out there anymore with 20 years. But look at the interest rates, look at the amount, the payoff amount, and then you can submit your private consolidation loan application online. And I'll tell you how to do that in a minute. Typically, you'll get an instant approval within seconds, and or if you are denied, they may just ask you to add a cosigner. And then you can begin the process of consolidating your private student loans or your private and federal student loans together for one low payment. If you just click on the I button here for information, it'll take you to our private consolidation loan product.